Hi, I'm Ken Canero with ECA Partners, and today we're going to be covering the executive search market. The reason I put this together is because I was actually doing some research for a friend of mine, and I wanted to send him a primer on the executive search market because he doesn't happen to know a lot about that. And there was really nothing good out there in terms of kind of reports or free resources on YouTube. So I thought I'd put together kind of a primer here, and we can dive right in. First, let's talk about the different topics that I'll be covering. So first is the types of recruiting firms. So in general, contingent versus retained. Next, we'll be going through the large retained firms and why it is you hear this term SHREK. Then we'll talk about specialized boutique firms. We'll cover some of the common mistakes and pitfalls that I've seen in the recruiting industry. We'll go over some common myths as well. And then as a bonus, I'll give you some questions that you should ask an executive search firm if you're considering engaging them. I've put chapters in this video so you can skip or go back to any particular area that you need to cover. So let's start with the different types of recruiting firms. In general, there's three models. We have a fully retained firm, a partially retained firm, also known as contained or container model, and then we have contingent model. So let's kind of compare these three different models. So first, I would say is in terms of kind of like pricing structure. We have the fee structure and the total fee. But so if we look at a fully retained firm in terms of fee structure, you're talking about you either pay in thirds or it's a fixed fee. So 1/3 is often due up front, a third is due after the first presentation of candidates, and then a third is often due at the conclusion of the engagement, or it's just a fixed fee model, say, hey, it's $200,000 to do the search. A partially retained or a contained model requires the retainer up front, similar to the fully retained firm, but the balance of the total payment is due upon success. And then in comparison, a contingent firm requires no retainer whatsoever, and then the fee is actually paid only upon successful placement of the candidate. In terms of total fee, you're talking about 35 to 50% of first year's cash compensation of that candidate for a fully retained firm. It's usually between 30 and 33% for a partially retained firm, and then a contingent firm is anywhere between 20 and 25%. Now, these are just general ranges. They're going to vary from firm to firm, and you might be saying to yourself, well, geez, why wouldn't I just go with a contingent model? It seems cheaper than a retained model, and that's because of the engagement model. So let's walk through each of the different parameters here. With a retained and a partially retained model, you're actually getting a fully dedicated team that is going to work on your search. With a contingent model, there's no team. It's just going to be someone kind of fielding your call and sending you resumes, essentially. In terms of the work conducted, you're talking about the end-to-end recruitment process done by fully and partially retained firms. So what does that mean? That means everything from an upfront strategy setting call, research, outreach to candidates, interviews, assessment, candidate management, all the way through to ideally a successful offer and acceptance of the ideal candidate. With a contingent firm, I would expect, light resume screens, light interviews at most. Again, these tend to be just kind of passed off via email. And that kind of brings me to my next point around client updates. With a fully retained and partially retained firm, you can expect weekly candidate presentations. Sometimes those will be done in the form of PowerPoint. Sometimes it'll be through a technology solution or a candidate or a client portal. With a contingent firm, again, these just tend to be kind of like resumes passed through via email. Client experience tends to be extremely professional for fully retained and partially retained firms. I would say it's not that it's not professional for contingent firms. It's just very much kind of at arm's length. And then you'll hear about exclusivity. A fully retained firm and a partially retained firm often require their clients to give them exclusivity on the search. Whereas a contingent firm, they're often competing with a lot of other contingent firms out there. And then, again, this tends to also be reflected in the commitment. So a partially or fully retained firm has a high level of commitment to success of that search. And for a contingent firm, it's pretty low because there's limited buy-in from the client, and so you would expect reciprocal kind of buy-in from the search firm. Okay, so some example roles of a fully retained firm that they might do is like the CEO for a Fortune 500 company. If Coca-Cola was getting a new CEO with a lot of publicity, very few total candidates in the market for that type of role, it'd be good to hire a fully retained search firm. Now, in contrast, say you own a middle market private equity owned company, and you're looking for a CFO, you might want to go with a partially retained model, just because, again, there's going to be a lot of interviews and assessments required to find that ideal CFO. You don't have the multi-million dollar budgets that Coca-Cola might have for their new CEO, and it's just a better model. And then for a contingent firm, like a good example of a role they might do is like a junior sales role or a junior sales manager for a VC-backed company or something like that. Again, just where you need kind of resumes in the door. All right, so let's talk next about large retained firms, also known as SHREK. So why do we hear this term SHREK? And it's actually really simple. It has to do with the names of the leading retained search firms. So you've got Spencer Stewart, Heidrick & Struggles, Egon Zehnder, Russell Reynolds, and then Korn Ferry. And then together, if you take the first initial of each of those firms, it spells SHREK. I won't get in too much, in terms of the differences in these firms, but all I'll say is they're the market leaders. They're the biggest search firms out there globally. But I will walk through the pros and cons of each of them from a candidate, client, and employer, I would say, perspective. So if we start with from a client perspective in terms of kind of the pros of working with a large retained firm, one of the SHREK firms. So first is they have an extremely large network, right? So it's a large firm, large network. They also tend to have very deep industry and functional expertise. So sometimes their partners will actually come from consulting firms, right? And it's like, hey, someone we used to work in supply chain as an executive at a consulting firm is now at an executive search firm. They're going to have really kind of strong functional knowledge in that particular area. I would say they're excellent for searches where there are very few candidates. So if you have a search where there's maybe only 5 people that are relevant for that job worldwide, these guys are going to have access to those 5 people. And again, it's a great option for those types of searches. In terms of cons, I think one of the cons is that you often have junior analysts doing the day-to-day on an executive search. You see the same type of thing with consulting firms is, it could be a very important project, a strategic project for the executive committee, but yet, like, if you were to peek your head into the team room of the consulting firm, you'd see a 23-year-old doing the work. And so take that for what it's worth. You do have partner oversight, so it's not all bad, but just something to consider. You also, I would say, should expect low candidate flow and lengthy searches, and that's just due to competing priorities, right? So, generally speaking, these types of searches have longer timelines and tend to be, you're hiring for a position where there's some politics involved as well. For example, the CEO of Coca-Cola, you got a lot of stakeholders, right? So again, this is not something that needs to be done, in a week. So again, low candidate flow in general, and the searches do tend to be kind of long. And the other thing that I would say that is surprising to me is a general lack of investment in technology at some of these, but not all of these firms. Some of these firms have, and I won't say which ones, have really, really strong databases and leverage technology as a key differentiator, whereas others are still relying on, basically, PowerPoint presentations and, kind of no lack of like CRM, for example. But again, kudos to them for being old school and still having the growth that they've had. Okay, now let's talk about candidates. So if you're a candidate and you're considering working with one of these executive search firms that are quite large, you should expect a wide range of opportunities. So they're the largest firms, they're going to have the most searches, and you're going to get to see the most opportunities. The other thing is they tend to have pretty good resources for candidates. So as an example, help with resumes or help with your LinkedIn profile, that sort of thing. On the negative side, just remember that you're one of many, right? So there's lots and lots of candidates that they have access to, and as a result, you shouldn't expect too much attention from them. And that's why you have to have a really good relationship with one of the partners at these firms. And I would double click on that to say it should be a senior partner if you really want to have really good access to the firm. Lastly, let's talk about employees. So if you're considering working at one of these firms, you're just like a large consulting firm, you're going to have the opportunity to work across a lot of different search types. The other really good thing about these firms is if you are in a selling role like a partner, there's already MSAs in place with a ton of clients, which makes selling much, much easier. So as an example, if you're working with a Fortune 500 company, and you want to do a senior sales leader role or something like that, and you're at a boutique firm, by comparison, you most likely have to go through the procurement and legal process to get a contract in place. If you're at one of the SHREK firms, there's a good chance that's already in place, and someone's already done all the heavy lifting for you. On the negative side, it is a longer path to partner, and you are competing with others at the same firm for business. So just like that example I gave with a senior sales role, there might be 3 other people that are competing for that role and have a relationship with that client, and so it does get a little bit dicey sometimes, and it does make things sometimes a little political at those firms. But again, that's not a criticism, it's just the reality of working at a larger firm. Okay, so next we'll talk about specialized boutique firms. And the reason that they're called specialized boutiques is because these firms tend to be smaller, call it anywhere between 50 and low 100 number of people, and they tend to have a particular niche in the market, which is why clients come to them. I'll talk about 3 firms, so Riviera Partners, ECA Partners, which is my firm, and then Kirby Bates Associates. These are just 3, I would say, really good examples of specialized boutique firms. So I'll start with Riviera. So their clients tend to be venture-backed or VC-backed companies, anywhere from kind of Series A through D, sometimes even larger. But the reason that is because their focus is technology. So some example roles of Riviera Partners that they might do would be head of product or chief technology officer. And the other thing that I would say about Riviera Partners that's really interesting by comparison to SHREK firms is they've also invested heavily in technology. So they have a proprietary, I think it's called a talent management system, but it's cutting edge. I believe they use machine learning and AI to drive better results for their clients. But again, it's not only their focus area, but kind of where they invest as well. Okay, let's talk about ECA Partners. This is my firm. So our clients are primarily private equity and PE portfolio companies. That's about 85% of our business. And that's because we focus on strategy, operations, and finance roles. So some examples of roles that we might place would be the chief financial officer for a private equity-owned company, the head of M&A for a private equity-owned company, or a chief of staff role, right? So basically the right-hand man or right-hand woman to the CEO. And, similar to Riviera, we've invested heavily in technology as well. we have our own proprietary talent management system called Cascade. Again, this enables us to drive better candidate flow and stronger results for our clients. But again, I think the takeaway here is that focus matters. Lastly, I'll talk about Kirby Bates Associates. Their clients are hospitals and health systems in general, and that's because their focus is on healthcare, and some example roles that they might place would be like the chief medical officer of a hospital or a business. They actually do a lot of nurse placements as well. But again, I think the thing to take away from the specialized boutiques is very niche and very kind of focused. All right, let's talk about the pros and cons of working with a specialized boutique firm. So first, we'll talk about it from a client's perspective. So one of the great things about working with these types of firms is they tend to have really strong candidate and client focus. What do I mean by that? So their ability to manage and focus on candidates and clients is, I would say, superb just because of their size, right? So each partner at these firms, isn't managing a ton of clients. They're not competing with others at the firms for those clients, and they can give you that kind of white glove experience. They also have experienced staff working on searches, right? So typically these types of firms aren't hiring analysts right out of college. They're, as an example, our firm, the most junior hire that we have is actually a PhD. So someone that has a doctorate, right? And so you have experienced staff working on the searches. And then the other great thing is they tend to be very knowledgeable in their particular niche or area of expertise, which results in just better placements and better results. In terms of the negative side of things, you are talking about smaller networks at these firms. So as an example, network is not the only thing that matters. But if you were to tell me that I had to do a nursing role, I'll just use an example from the previous slide. We don't know those folks, right? Kirby Bates does, but so network does matter to some extent. And then I would say as a con, so they're not necessarily ideal for highly publicized searches, right? So, and I'll use the old saying as no one ever got fired for hiring McKinsey. So if you're an executive at a company and you're working on an important strategic project, you always hire McKinsey because, the old saying, no one ever gets fired for hiring McKinsey. The same tends to be true, right? If you're an executive, if you're a board member or something working on a CEO search for a Fortune 100 company, you're going to want to go with one of the SHREK firms because, in general, people are going to ask a lot of questions if you don't do that. Okay, let's move over to the candidate side of things. So if you're a candidate and working with one of these boutique firms, you're definitely going to get really great focus and attention. You're going to have access to senior partners. Even the CEOs of some of these firms will talk to candidates still. In terms of the cons, I would say, don't expect too much kind of like off the shelf candidate resources. There's not, there's just not as much available because their focus tends to really be on clients. And then just because of the size of the firm, I would expect just, less total numbers of opportunities in terms of roles. Shifting over to employees, if you're considering a career at one of these firms. So one of the best things about these firms is there tends to be a quicker path to partner with significant upside, right? So I know folks that make way more money in the partner roles at specialized boutique firms just because of the market that they're able to cover. And, frankly, that has a lot to do with less internal competition, at the firms, right? So it's harder to win that business, but if you do, there's a lot of upside. In terms of cons, I think it's definitely true you need to work harder to sell. So you can't just kind of like, if you're at one of the SHREK firms, you can walk in, there's a good chance that the client, has an MSA already with your firm, And you don't have to prove yourself. With boutique firms, you absolutely have to prove yourself. So it's harder to sell. And the work can get very busy. So I would expect longer hours at these types of firms, just by the nature of their size. The ebbs and flows of utilization can be more variable. All right, so let's talk about some of the most common mistakes that I've observed in recruiting. So let me move my video here to this corner. So the most common mistake that I start with is starting with the ideal profile. So I'll give you an example. Hey, I need to hire a CFO in Reno, Nevada. Well, that's not actually the right place to start. The reason for that is it limits your overall number of options, right? And you have a lack of alignment on the overall business objectives. So what should you do? You should actually start with identifying the business objectives and then develop search strategies around that. So to stick with my example around a CFO in Reno, Nevada, instead of saying, hey, we need someone with finance experience in Reno, say, hey, we need this person to develop a finance function. We need them to oversee the acquisition of 5 add-on companies and implement an ERP system. Okay, well, now we can then develop search strategies around that, identify ideal candidate pools, and you really, really open up your world of options as opposed to kind of like limiting yourself by just focusing on the quote-unquote ideal profile. Mistake number 2. Low candidate flow by the search firm. So I see this a lot, not at my firm because we really over-index on the numbers, but I do see this at some of the larger firms as well as some of the more old school boutique firms. But look, it reduces your overall likelihood of success. If you're 60 days into a search and you've only got 5 candidates, what are the odds that one of those 5 candidates are actually going to kind of move forward with an offer and be liked by the client, all those good things. So it definitely lengthens the duration of the search and reduces the overall likelihood of success. Solution is really simple. You have to over-index on the initial outreach and interviews. So again, at our firm, we really, really pride ourselves on thinking of recruiting almost like Moneyball for recruiting. So this is a large numbers game, and it really increases the client's chance of success if you overdo it on the interviews and outreach and assessments. The other thing I would say is agree on a numerical target up front. So if you are going to engage a search firm, ask them, okay, how many candidates should I expect by week 2, 4, 6, 8, right? So, agree on those targets or something directional. The last mistake I'll mention is just poor data gathering and tracking. So, I see this a ton, again, across all different types of search firms. But what do I mean by that? So basically, you're going to limit your ability to prioritize candidates, and then you have potential surprises on the 1-yard line. So I'll give you an example of poor data gathering and tracking. So at our firm, when we talk to a candidate, every single time that we talk to them, we gauge their interest by saying, hey, on a scale of 1 to 10, what's your interest in this role? And then we track that number over the number of conversations that we've had. And ideally, we like to see this number increase as the level of information that they have about the role goes up. Makes sense. It also gives us information about their likelihood of eventually signing with the client. In contrast, I see a lot of search firms that do not do this practice. And then at the 1-yard line, the candidate is either not interested or asking for significantly higher compensation. So what's the solution? Develop a standardized interview template up front, and then track and compare answers for all the candidates across those common questions, and then see how it changes over time. All right, let's talk about some myths in recruiting. This one's kind of fun, but the first myth I would say that I've observed is network is the only thing that matters when picking a search firm. So I would say that network is important, right? So if you're going to engage my firm on a nursing search, again, I don't think that's probably a great idea, because that's not our network. But it's not the only thing that matters, right? So, again, I'll stick with the nursing example. Network does matter. You need to know, be connected to nurses, right? But if you don't have the right process and approach in place, it really doesn't matter, because then you're just literally collecting resumes and sending them over to the client. So network does matter to an extent, but I would say the team working on the search matters tremendously. And then also their approach and how they're actually going to conduct the search really, really matters. Myth number 2, the more interviews, the better. Okay, so yes, you do need interviews and assessments. Do you need 400? No. Often one thing I see, and this is probably more, I would say, this is sometimes a search firm problem and sometimes a client problem. So I would say you need an adequate number of interviews by the search firm before you present a candidate to a client. And I would say at minimum, there should be 2 interviews with that search firm, sometimes 3. Now with the client, what we'll often see is it'll be interviewed by committee, right? And then anybody in that interview process can veto the candidate. So it could be like 10 interviews at the client level, and then someone's having a bad day and vetoes that particular candidate. Well, that's not a good process, right? That doesn't really ensure the best outcome for the client. So yes, interviews are important, assessments are important, but you don't need to have interview by committee and veto. Okay, myth number 3, the perfect candidate doesn't exist. So yes, they do exist. So you'll often hear the opposite from recruiting firms right out of the gate, that like they should, quote unquote, the unicorn doesn't exist. I would actually set your expectations high, that the perfect candidate does exist somewhere out there. And again, it's whoever's going to achieve those business objectives. Now, they might not be aligned with 100% of your initial view, but the perfect candidate is the candidate that is going to achieve the business objectives that you've set out. So they do exist. All right. As a bonus, I wanted to include a couple questions that you should ask a search firm before you start working with them. Who will be working on my search, and what else will they be working on? This is probably the single most important question you can ask a search firm. Figure out who the team is, right? So, yes, you might feel comfortable working with a particular search firm, but at the end of the day, there's people that are going to be executing that search and engaging those candidates and interviewing those candidates, and then summarizing them for you. And so you want to know who's going to be doing that work, make sure that they're capable, and then also understand at a general level what else they'll be working on. Because this is going to tell you, if they're working on 12 other searches, you should know that, and you might not be a priority for this particular search. Okay, so ask them that. And then the other thing is, I would say, ask them to see an example of a client presentation. So the reason that you'll want to see this is because it's basically past work that they've done maybe for another client. Now you can get it sanitized. The reason that you want to see this is because you want to see that the right updates and statistics are included throughout the search. So if you're working with a search firm, it shouldn't just be passing off resumes. They should also be reporting on all the metrics and analytics that matter. As an example, I've just included, a screenshot here from, one of our clients. But, for example, every single week, at any time, actually, a client of ours can log in. They can see all the different candidates that have been contacted, indicated interest, done the screening, gone through the second level screening, presented. So you want to see all the details across that. You also want to get a window into the pipeline, and that's just going to give you kind of like an overall better picture of where things are at. And then you'll also just want to dig into the quality of the candidates that they have you know, and you can see those below. Again, this is just an example from our search firm. But anyway, thanks so much for listening to this overview of executive search. I hope it's been helpful. And then I've gone ahead and put our firm details in the link description below. If you have any questions, you can contact me directly, kcanera@eca-partners.com. And thanks for joining.